The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 116, Nasdaq off 16, S&P's off 10.5. Gold contract up $7.60 at $15.94 an ounce. We got silver up 23 cents, $17.96 an ounce. Light sweet crude down 70 cents, $51.36 a barrel. Notes and bonds. You get the 10-year up 6 ticks, 131.06. The 30-year up 19 at 163 flat. Both of them going up with volume once again. And King Dollar up 283 ticks, trading 99.286. King Dollar's each and every day trying to get inside this higher range. Almost made it again today and just gave up a couple hundred ticks pretty quickly. Euro's at 108. The yen is out here at 109.90, and the pound is at 130 to 1 US dollar. Apple comes out with a warning, shakes it off. Walmart comes out with a warning, shakes it off, and the market's up.
Not bad.
And Walmart's up. You're going to love it, man.
Yeah.
Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Think and Swim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. You want to understand the option market, option strategies, futures, great program. As you're sitting at TFNN watching us right now, just hit that Think and Swim banner. You can bring it up. You can trade with paper money. Follow Kevin and his team every trading day. Hey, Kevin, we're just going to say we got a big balloon. We throw it under the water, and it pops up every day, man.
It's unbelievable. I mean, this market is pretty resilient. You know, some of this news, I'll tell you the biggest surprise, bigger than Apple, I think, in my opinion, is Walmart.
Yes.
Yeah.
Number one, the numbers that they put up and the kind of disappointing numbers, and then the stock is still resilient. The stock is still up.
There's no doubt.
I think Walmart's a bigger surprise today in what it's doing than Apple is. Apple, you knew there was going to be some fallout.
Yes.
From, you know, and the double whammy that is hitting Apple right now is it's both sides.
Yeah.
It's the supply chain and its demand. So not really surprising that Apple's going to come out with this. And they gave themselves, if you look at the numbers that they put up, they gave themselves a pretty wide range to fall into. So I'm frankly not that surprised with Apple. Walmart's the one that's more surprising. And then we got this Empire State Manufacturing survey this morning that was a blowout number of strength on the upside. And I think that's taken some of the teeth out of this downside move. It's made the bonds come back, and it's it's just Apple's a story, and we got to deal with it. But when a lot of people, when Friday closed trading, a lot of people thought the coronavirus would be one of the headlines, but not this way, frankly.
Yes. Well, you know what's so intriguing, too, is that you had a big analyst come out this morning, folks, Dan Ives, saying that he was surprised. It was like, hold on, how are you surprised that Apple's going to have a tough time, basically with supply? Because the bottom line, it comes out of there. And then you look at the equity. I mean, Apple was trading here like, a week and a half ago.
Yeah, right.
So it's like,
Right. You're not talking about a big drop-off here.
No, you're not. And then when you go over to Walmart, now this is what's pretty cool, folks, okay? The Walmart turned around and came in, with a warning, and they said that the holiday sales wasn't as good as they wanted. But Walmart, their major suppliers are not in China. Their major suppliers are Procter & Gamble. Do you know what I mean? It's a whole different business setup. So it's like, okay, unless the coronavirus hits the USA, I mean, Walmart's not going to get hit by a supply disruption. It's not like a Home Depot. Do you know what I mean? A Home Depot, you bring the stuff in from China.
Sure.
Walmart is, basically they have some of it. But the reality is most of it, when you look up at that supply chain, it's...
I mean, you can, as long as you're willing to look at Walmart in a not versus the expectations. Their numbers were still pretty solid. $92 billion in revenue over 90 days. They raised the dividend. E-commerce sales grew 35%. So this is not, you you can say that these results were disappointing, but how disappointing is $92 billion in sales? I think what really disappointed over the Christmas holidays was toys. It looks like both Target and Walmart were a little light on toy sales that they were hoping to take from, Toys R Us's of the world and that thing. I don't think that panned out like they wanted.
Sure, and you can understand, right? I mean, the technical age we have, the definition of toys are a little bit different, maybe.
Yeah.
You know what I mean? That's okay, what is a toy? Well, I don't have an Apple phone, but if you have an Apple phone, that's a toy, right?
Sure.
That's the ultimate, right?
You got a million games on your phone, man. Seriously, right?
Right. So.
And it may turn out, guys, that the biggest toy bought over the Christmas holidays was the earbuds, the Apple earbuds.
Oh, that would make sense,
Those
man.
You know what I mean? Think about how much oxygen and revenue that was sucking out of Christmas. Because I don't know anyone who didn't give out at least one or two of those as gifts.
Sure.
There's no doubt.
Yeah.
And just when you're driving around or just walking around the city, you see them everywhere.
Yeah.
I mean, it's like, like if this was, 10 years ago, you'd be walking down, you think the people are talking to you.
Right.
Right.
On their earbuds.
There's become a new phenomenon in the world is where everyone's got them on, so everyone is saying good morning to everyone at the health club or hello, and no one can hear anybody.
I know,
You're all just kind of nodding.
Yeah.
You're nodding and smiling at each other because no one can hear anybody. They've all got earbuds in.
No doubt. Now, when we look at these notes and bonds too, Kevin, we've talked about it before. These interest rates are getting so low. I mean, it's a phenomenon. We know it is. But the bottom line is if they keep getting lower, I can understand how this market can just sustain itself. Because if we ever break the 1.31, we're at 1.52 right now in the 10-year, folks. I mean, what are you gonna do? I know what people are gonna do. People are gonna put their money in the marketplace because those dividends are monster dividends, man.
Yeah.
Right. I mean, look at Walmart. Walmart raised their dividend. Their dividend is still over 2%, and you're looking at a 1.56 on the 10-year.
Right.
I believe, and we met with customers this weekend in Scottsdale.
Okay.
And the theme of when I was talking to our customers was, as long as this 10-year is lower than the dividend rate of the S&P, or the fact that 22 or 23 names in the Dow Industrial Average have a higher dividend yield than the 10-year, stocks are going to be in favor.
Right.
And dips are going to be for buying until you see that relationship change.
Yeah, and then when you look at the overall market, right, it's like this market, everything gets thrown at it. So what would be the shock that the market would have a normal pullback? I mean, I just don't see it out there. And believe me, I've been looking.
I think the shock would be European rates start to spike, which would make our rates start to spike, or any serious inflation level in the U.S.
Right.
If you see inflation start to pick up, to the hot level, and you get a 10-year up towards 2 or 2.2, I think stocks are going to fall out of favor then. But as long as we're at 1.5 and change, stocks are in favor.
Great.
I know, man. It's pretty amazing. Folks, right here, 45 minutes from now, outstanding show. Kevin, you have a great one, safe one. Of course, we look forward to the show.
Nice talking to you guys. Have a great day.
You too,
Thank
Kevin.
you. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrial scratching its way back. It's down 101. NASDAQ is off 5. S&P's down 7. We're coming right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow down 117. Nasdaq is off 8. S&P's off 9.5. It is pretty wild. I mean, we're like the Groundhog Day every day. I mean, you know.
I thought you were going to say Ever Ready Bunny.
I was. That was coming out, and then I went to Bill Murray.
Yeah. It's both.
It is just because it's amazing, man, that you can get news like that.
Yes.
And I think the market was looking for it on Apple anyway.
Yeah.
And it just shakes it. It just shakes it up,
right? I mean, the factory's closed. Little one, I saw a statistic today. Apple, I believe, 15% of their revenue derived from China.
Okay.
Talking about, you know, one of the biggest companies in the whole world, if not the biggest.
There's no doubt.
15% of the revenue coming from a country that's basically shut down.
Right.
Let alone almost, we'll say almost 100. I don't know what it is. It's almost 100% of their production coming from China. So they produce everything they have in China. They sell 15% of it in China. And China's shut down right now, and they are for the foreseeable future. Now, what was interesting was that they actually have production back up.
Yes.
Everything's back up and open. But it's back up and open at a much slower rate than they anticipated. And when they talk to the demand side, they're open, but very, very slow numbers coming in for Apple, as you'd expect, as the malls in China, I expect, are not what they usually are, to say the least, right?
That's right.
Yeah.
And if you happen to be watching Tiger TV, folks, what we have up there right now is the supply chain. So on the left-hand side, as you're looking at it, that's where everything gets made, and the right-hand side, that's where it gets sold.
Yep.
And you can see, as just Tommy said, that you're talking about a huge amount of companies that are in Asia, China, Taiwan. That, the bottom line is that that's where these supplies are coming from, okay?
So check it out. They get the percentage of revenue, too. Now, the name I'm most familiar with that maybe most are is Foxconn, right? The big producer.
That's
so
right.
It looks like about a third of Foxconn revenue coming from Apple. They're down about 11% today. Yeah. I saw Quanta Computers. They were in one of the articles I was reading today, so more than half of their revenue coming from Apple. They're down about 11%. Samsung, we're all familiar with. Yeah. 7% of their revenue coming from Apple. Look at that. They're down today.
And they're monster.
Yes.
Yeah. Taiwan Semi, same deal. Yeah. Now watch the difference, folks, when we were just talking about Walmart, and you're going to see this.
Not not PHCC.
Okay,
SPLC, right?
thank you, SPLC. I don't think it will come up.
I think it will.
Okay.
Yeah.
So when you see this, now you're talking, it's impressive here. When you pull up Walmart, folks, Berkshire Hathaway, 4% of the revenue. I wonder if that's all insurance. You know what I mean?
Do they have Procter & Gamble? Berkshire might be a huge...
Well, right underneath it is Procter & Gamble.
Yeah.
But anyway,
Yeah.
it's a big number. Well,
Yeah.
it would make sense because
Sure.
Walmart, $92 billion, right?
Right.
But you can see it's Procter & Gamble, Pepsi, Tyson
Right.
Foods, Kraft, Nestle.
Yes.
You're not getting hit from China.
Yeah.
On it, And hey, let's try.
Where's all the revenue side? I don't know. No, I don't know.
Yeah, they just put it right into that, I guess. They don't have the other side, do they?
Yeah, I don't know. It's not worth, but yeah.
So I want to do this for a second. I'm curious what Home Depot, how much
Okay.
SPLC, because it makes sense that more would come in from China.
Sure.
Let's see. So you got Whirlpool. Whirlpool is actually a China corporation now. It used to be an American.
Okay.
Universal Forest, USG, Electrolux. It's hard to tell. We'd have to get our head wrapped around it.
And some of the Walmart numbers, I'm just going to jump back to the actual numbers. So same-store sales, always a big one, right?
Yeah.
1.9% versus looking for 2.4. That's one of the more crucial statistics
Right.
out there.
Right.
You can't fix that one, right? You can't cut costs and tweak that number. How much are you selling at stores that were open a year ago compared to what they were doing a year ago? Still a mammoth number when you think about. Wasn't everybody shopping at Walmart a year ago already, right?
Right.
And they're growing at 2%.
Right.
Now, you got population growth. You should have that type of growth.
Right. I know Kevin gave us the number, but I wanted. So, I was
like, where
something's
we at?
wrong.
Yeah.
Hold it, Walmart. Because we're talking 90 days, $92 billion. That's $1 billion a day, right?
I thought it was higher. I'm not
It
sure
is
where
higher.
I'm not sure where he got the 92. Maybe there's some breakdown, but I thought
141 billion in 90 days.
Yeah. Not bad.
That's unbelievable.
Not bad at all.
That's unbelievable.
Yeah.
Seriously.
And to get into the news, back it up again. So they're the same store sales, 1.9 versus 1.2. Walmart remains in a good place. I believe this is their CEO, right? Neil Saunders? Nope, of Global Retail. Okay. Where was their CEO? Because he's in there talking it up. 'Cause it had to do with the holiday.
Okay.
And we've already had Target come out and talk about kind of a weak holiday sales. So here we go. Where were we? There we go. We don't know what will happen next in China, CEO Doug McMillon said, adding that most stores are operating with reduced hours and delivery expenses have increased. There's so many moving parts right now. I think we'd all agree on that. Nobody really knows what's going to happen,
Right.
You should just be pricing in some form of a probability of a slowdown, to say the least. In its home market, where Walmart generates the lion's shares of its sales and profit, the subpar holiday was due to weakness in apparel, toys and gaming. Big said in an interview, reasons also cited by Target. In apparel, it carried too much seasonal merchandise, he said. Gross profit margins also declined in the quarter due in part to changes in employee pay incentives that were a bigger factor than anticipated as fewer workers skipped shifts during the season. There was one thing mentioned, let me see if I still have it up, on the CNBC article I had, because they talked about their employees. We'll pull it up during the break, but I kind of was taken aback because they're the biggest employer in the country, I believe, and if they can't have a great anticipation of what's going to happen with their pay, their employees, they should be on top of that better than anybody if they're the biggest employer out there. So to have that kind of hit their earnings, but maybe the market's saying that's a momentary blip that they'll get under control.
Right, if we're at full employment, the bottom line is that how do you get more workers, keep more workers, okay?
Sure.
Because guess what? Every time that employment keeps going up, well, that's where the competition comes, and I suspect, a Walmart would basically be losing people to other, smaller businesses that can say, okay, I'll give you another $1 an hour or whatever that is.
That's
you know what I mean?
How about Tesla, man?
Oh my God.
We at $1,200 yet?
Tesla's something else, man. I mean,
Morgan Stanley, right? Was that Morgan that said we might be at?
Yes, and Morgan Stanley was supposedly the bear in Tesla, and I think they're saying $1,200, right?
There we go.
Yeah.
So from $650 to $1,200, nearly double its bullish case price target on Tesla. Tesla's rising sharply, so they're up about $50, almost 5%. So you have the analyst Adam Jones now has a $1,200 price target on the stock, up from the firm's previous view of $650 a share, almost 50% up. Jonas's price target would give Tesla a market cap of $220 billion. I believe that would be bigger than Toyota. I believe Toyota's at about 190 or 200 right now. They also raised the base case for Tesla to 500 from 360. So you got the bull case, you got the base case. Thanks to the firm's view that Tesla's in a position to become a key battery supplier for other electric vehicles.
Yeah.
That would be pretty intense.
That's intense.
Yeah.
And you can see what's so crazy about this, folks. Tesla's trading 850. They went from bearish. They had a bear case out there at 360. And
That's the base case, though.
No, but if you go further, this call today is going from a bear case against it to a bull case.
Sure. Yes.
Pretty
No,
amazing.
reversed it. Yep.
Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now down 183, Nasdaq's off 28, S&P's are down 16. Something just hit this market.
Yeah.
Gold, folks, okay, the bottom line, it's been in a complex ABC structure on the way up. And if we get over here and look at it, it looks like we're going to do it. It's pretty amazing. This is really early in the morning. to have the type of contract volume inside gold. But that's what we need, because the last time that we went after this B point, you had big volume also. So what you have here is this, is that right now you're up 1340, you're at 1599, we just hit 1601. Your B point on this was the 1595.70. You get a price projection of 1704. And you get volume coming in today. The last swing high we had up there was 321,000. We're at 277. This thing's going to do like 4 or 5. Yeah, it could do 500,000 today. We're 277 at 10:30.
That's right, man.
So that's quite a move.
Yeah.
And let's go to the dollar, because the dollar, this thing has been strong, and it's trying to basically get in that larger range. And man, it got so close out here today. I mean, you can almost, it's a little tough to get this trend line correct. So you're talking about a variation for sure. And actually, look. Oh,
so you go so far right on that. Yeah.
No, I know that. I don't mean to.
I know.
All right, I cannot do this. Okay, so 1 second.
Let's start over. New chart, no?
Yeah. Go back to 3 years.
We're there.
Move this thing over. Okay, so now what we're doing is, folks, we're going from February of 2018, and it had broken down. Look at that. It hit the line perfectly this morning.
It did.
We came up, the trend line here is 99,470. There we go. So the market, we hit 99,470. Now, when you break a line, in order, probability-wise, you want to see it broken with conviction, in this.
Sure.
And that would be like you really go through it. In this case, what just happened here, we got up to it, and then it gave it up, and that's what gold may be seeing on the other side when it caught that bid. Let's just see. Yeah, it came down pretty quick.
Yeah.
And then if we go over to the other side of that coin, which is the gold market, you're going to see more than likely that we went up pretty quick when the dollar decided to give it up. Look at that. Yeah. I mean, the dollar.
Oh, definitely.
So this is a big number, man, inside that, inside the gold market. Let's go see what silver's doing, because silver also caught a bid this morning. And silver is a lot weaker than gold still. But there you go. You get the volume behind it, man.
Definitely.
77,000 contracts. That's early for 77,000 contracts. And that looks like it's going to be going for 1889. So
maybe a little pent up trading desire with a long weekend. The Apple news coming out yesterday. My friends and I chatting, talking, saying it'd be interesting to see how this hits Apple and the market tomorrow.
Right.
And that was not a huge impact, but we just dropped another 75, 100 Dow points almost since in the last 20 minutes.
This is gonna, every time that I say, well, this market keeps shaking it off, we know how this works. It shakes it off until it doesn't shake it off.
Yeah.
But number-wise, it is pretty amazing, folks. I mean, I'm still trying to figure out, is there just so much cash? I read a couple articles over the weekend that were pretty cool. That, let's say if you have your portfolio, and in quotes would be like a fundamentally balanced portfolio.
Diversified?
Yeah, exactly.
Yeah.
Thank you. So if that's what it is, what ends up happening is that these FANG stocks have gone up so dramatically. With the base case would be that, say, okay, you got to sell a few of the FANGs because you're up so much money.
You're too overweight in them.
You're too overweight.
Yeah.
You got to spread it around. If you got to spread it around, everything's up. So
where are you going to spread it, right?
Where are you going to spread it? You know what I mean? So,
but you should get rediversified, because if you are in, Apple.
Oh yeah.
You just went up 100%.
Right.
Well, do you really want to be that centered?
Watch
Apple?
this. This is so
maybe
cool.
Maybe you do.
This is so cool.
Maybe you do.
What you just did. So watch this, folks, okay? The 13F filings, everyone had them filed by the end of trading on Friday, right?
Okay.
And I pulled this up, and wait till you see this. There's one big fund that got out of Apple totally. There it is, Invesco. Look at this. What day is today? Yeah, this was yesterday.
Yeah.
So it'd be filed on a Friday. They sold 36 million shares. Now, this one here is saying that they sold it last week, because the filings are 217. I was only looking for the ones at 1231.
Okay.
Because the 12, well, you can see the difference is that's not the same filing.
It's not a 13F.
Right.
Right.
So what we did have at the end of Friday is that you have all the 13Fs that had to be filed. In this particular case, you had Invesco turn around and they moved a lot of product out, man. And that's one big lump. But I mean, it's right at the high. It's like, okay, you know.
Can't blame them.
No, you can't. And then if we go to the buys, you're going to see T. Rowe Price, man. That last quarter, they came in with another 27 million. I mean, there's a lot of buys here, too.
Now, that's the same. That's not a 13F. So I wonder how we'll figure out how that...
Okay, so what ends up happening is that some of these large firms, they file whether they own 5% or not. You know what I mean? And I think T. Rowe Price is probably really a mutual fund market, you know what I mean? And maybe it's spread. They'll tell us. If we go like that, it tells us sometimes how this spread around. Oh, multiple portfilios. That's the only
well, there you go. It is mostly a 13F.
Okay.
Can we go back to the negative side then and click to expand the Invesco one?
Yep. Let's see. We go. Hit that one. Cool.
So there you go. It is a 13F.
Look at that. Yeah. Oh, yeah, it's a very small one.
That's the other one was the same. So it's treated as a 13F, essentially.
Isn't that wild?
Now, that's where, so it is December 31st.
Oh, even though it said the 14th.
So what these ags, and that's what it says, it's an aggregation, the MF ag or ultimate ag. It's an aggregation of various sources of data. So most of the time, I guess it's going to be a 13F but nonetheless. So they sold, as of December 31st. 36 million shares last quarter. Wonder where they sold them.
Right. Yeah, I know, because if we look at that, so yeah.
But they could have sold them all the way in September, right?
They could have. Yeah. No, oh my God. That'd
quite a difference, man.
Yeah, because December 31st, we were at 293, which isn't bad. September, oh my God.
Exactly.
Oh, this is...
A little further. Where are we at?
Right there.
204.
Oh my God, 204.
So it's a difference of potentially a 50% profit from 200. You sell it at 200 or you sell it at 293? 200 or 300?
Amazing.
Yeah.
So we get a question about buying an Eco Eagle. This thing, folks, came down hard. I mean, really hard. And the question is that can we do some nibbling here? I wouldn't do some nibbling yet. When you come down this hard, most times, okay, you're going to be basically testing lows. And an Eco-Eagle place, you know, last week we came from 60 to 48. It looks to me like 46 is on the agenda.
Yeah.
You know?
I mean, and you got gold touching 1,600 for the first time in a while today, and still you're down another % on AEM.
You are. Because what happens here also is this. Picture this when you look at this. You got anyone that bought it from, you know, June 21st is in a losing position if they didn't sell it.
Yeah.
And this was a big expansion, folks. Okay, we went from 46 all the way up to 64.
Yeah.
You know, so...
Even if you go from 50 to 65, you're talking about 30%.
Yeah. So I would wait. I'd let it get back to that breakout area, test a few times, and then it's got to build some cause. It's got work to do. Dow Industrial's down 176, Nasdaq's off 26, S&P's off 14.5. Gold and silver, we're caught a bid here. We'll see whether this dollar's going to really give it up. Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. 877-927-6648. And if you got to watch that Daytona 500 at all, that was one extraordinary finish, and glad everyone's all right. But, man, that
at least, I mean, he's non-life-threatening to Ryan Newman, but serious injuries. And so quite an accident at the end and quite a picture up there in terms of being flipped over on his roof and then getting hit in a fireball as well. So sending him some thoughts and prayers out there, but quite a race, man. We just watched some of the videos, and that was quite a wreck, but there were like 2 other massive wrecks coming down the line.
Right.
That were
in the
just
last 25 miles. Laps, rather.
Yeah.
Right. It was pretty wild.
So pretty incredible, man, for sure. And I'm going to jump over, since we're on sports, man, hockey. I was seeing, I think the Lightning have won 8 straight, but our 2 hometowns, man, you got Boston and you got Tampa Bay again at the 1-2 at the top of the Atlantic Division.
Look at that.
And that's, it is. So look at the streak on Tampa, man. 11 wins as they continue to charge higher. But the 2 at the top, that's where they were last year. Now, if you recall, for the Tampa Bay fans out there,
seriously,
had a record-setting regular season, tying the best regular season ever, and then got swept in the first round of the playoffs for nothing.
Right.
So it all counts in the postseason, of course. But
it's where the momentum is.
Hockey season heating up, and we'll see. But pretty cool, Boston and Tampa at the top of the Atlantic. And then on
we're getting close to playoffs, right?
We got to be, because they're at 60 games. I think they maybe play 80 or so.
Okay.
So maybe 20 so. I mean, we're coming into late February, right? Now the playoffs really stretch things out.
They do. I mean, it's like a whole new season.
It is, because you got best of 7 series. I think 16 teams make it into the playoffs. So you got to whittle it down. But yeah.
Pretty wild.
It is.
Let's go take a look at some of the higher volume equities out here and see what else is moving out here. You get, Virgin Galactic. This thing is on a rocket ship. Even when it started out today, it was
no pun intended. Maybe pun intended. Pun intended.
Yeah, really.
No pun intended. All right. Well, pun there.
Yeah. It started up. Watch this. It started. I looked at it started up $3. And then just kept going, man. I mean, it's only it's a $35 stock now. Okay?
No, it's huge. Up $6.50. It was at $29. And what?
And what do you see this?
Yeah.
We go back to December 6th, and it's at $7.22.
So what are they saying today? Looks like an extension from Friday as well.
And let's see.
No, they got nothing. Even better.
No, and this is not an equity that has like big revenue either. I mean, this is like a biotech basically. It's what are you going to do for me in the future?
Pretty remarkable, yeah.
Isn't it?
Yeah.
And then when you see, let's put the revenue up, because I did this on Friday. It's like, okay, This is like promising what's going to happen.
Yeah.
You know, in the future.
Okay.
You know, all of 2019, they're looking to take in, what, 4 million, 27 million, but
Yeah, so people are cluing in, I guess, maybe in the next few years that recreational space travel is going to become...
It's fun. It sounds funny, doesn't it?
It does.
Recreational space travel.
Yeah, missiles, rockets, space vehicles.
7.5 billion market cap, and they take in 7 million, right? You got, I heard you in the news that Franklin's taking, is it Franklin taking over someone else, right? Or is someone else taking over?
Yeah, Franklin buys Legg Mason.
Okay.
So the two of them combining for 1.5 trillion. I believe it's Franklin's got about 800 billion in assets.
Okay.
And Legg Mason's got 700 billion. And that 100 billion, the difference in who buys who, I guess.
It's pretty amazing, man.
It is.
I mean, we're talking trillions now.
Yeah.
And
both of them trading higher. You had Legg Mason really charging higher, $50 a share, I think. So they were up 20-something%. But it looks like the market really liking it for both parties.
So let's go see what's going on with Ford Corporation. This is pretty intense. Now, this is a monster company. So this company here, infrastructure, you know, they're in the oil and gas business. Interesting. Provides oil and gas infrastructure, construction services. They're in a lot of different businesses, but we'll see what's hitting them out here this morning. This is pretty intense. You're down 25%, right?
Yeah. Yeah.
$5 for 478. Look at this thing. And let me pull this back. Yep. Wow. It's been a one-way trip. We go back to $83 in 2014. I got to bring this back way back and see what we're going after here. Whoa. Look at this. This oil and gas business, man, is getting hurt. This is back. You're trading at 2003 levels.
Yeah.
2003 levels.
What's the news on them today?
Yeah.
SEC probe for past accounting. That'll do it.
That'll do it.
Never good when you can't trust the numbers of a company that's already in the toilet practically.
And they're expecting to delay this one coming out. Doesn't expect to report its prior to the end of February. Okay, so that's a problem.
Yeah, I would say so, for sure.
We start with books, and you know, your bottom line is you're already in an industry
struggles, man,
that has been getting hurt.
Definitely.
You know, you're talking big numbers here, man.
Yeah.
Well, let's see.
How about some of the other companies with earnings? I saw Advanced Auto Parts, I think, AAP.
Oh, let's see this. These things are insane. I know. Look at this.
And I thought in my head, what's the other?
O'Reilly.
O'Reilly. So that's the one.
Let's put this up. So we're putting up.
RV? I don't know if it's RV.
Yeah, I'm just putting.
Oh, okay, they're rivals.
Look, I'm surprised O'Reilly's not in there. That's weird. So I just put a symbol up, folks, and O'Reilly should be in here, and they're not for some reason. I'm like, Genuine Parts is in there.
Yeah.
Advanced Auto Parts.
Maybe just start typing.
Yeah.
Oh, okay.
Wait to see this powerhouse.
Well, that's because in my head, when I pulled up AAP, I was expecting the chart to look like O'Reilly, I think.
Yeah.
If we go even longer term.
No, I will. I mean, this is quite a chart. This is.
Yeah. And maybe we'll put it, I didn't put it back this long. I just even put it back short term. But man, oh man, talk about a charging higher.
And we'll compare it. AAP, right?
Yes.
Okay, so let's see. We'll compare AAP.
There you go. And what is funny is every time I started typing AAP this morning.
What a difference. Holy cow.
I finished it with an L, and I laughed at myself because AAPL.
Yeah.
I couldn't.
Couldn't stop.
Yeah.
Yeah, so we have both of these up in a chart, and you can see it's pretty substantial, the difference, man.
Quite a difference, man.
Right.
And to get into even shorter time, look at that, right? You know, right. I said to myself, oh boy, and even putting it on like a 3-year weekly, you know, you're only back to flat over the last 3 years, man. You are up from that low, but today jumping higher on a beat.
Yeah, and what you have seen, I mean, depending where you live, I mean, in Florida, what happens, O'Reilly's are everywhere. The AAPs are a lot of places, but there's no new ones.
Okay.
You know what I mean? I don't see them. The O'Reilly's building, like, every single corner you look at, it's like a drugstore. Do you know what I mean? It's and we know that, you know, the margin in that's, remember we talked about it before? They're talking 50% margins on car parts. 50, folks.
Don't tell Bezos that, man.
No, well, what's supposed to happen in the capitalist society is that when you get big margins like that, there's supposed to be other companies that will come in and say, okay, I want to reduce that margin a little, you know?
There's got to be other elements in that business, man, because if it's that easy, Bezos would be doing it. And they'd, you know, and I don't know. We'll have to get some interviews of somebody that came, because I agree completely. You know, their parts, they all have simple numbers on them for their part. Well, what's how they making those margins? But they are. They
stay right there, folks. Tommy and I come right back. Dow down 175, Nasdaq off 13, S&P's off 13, gold's up 15. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 167, Nasdaq off 12, S&P's down 13, and this HSBC, there's no doubt, this is like a monster number. They're
tough day to be an employee over there, man. They're going to be cutting 35,000 jobs, 15% of their workforce, cutting it down from about 235,000 down to 200,000 over the next 3 years. The most remarkable part of this story, I think, is that they're doing it with an interim CEO at the helm.
Exactly.
And I said to you at the break, you don't even have enough confidence to name that interim the permanent CEO. And meanwhile, you're going to let them cut 35,000 jobs and make a number of strategic decisions that could reshape the entire company forever.
Right.
you could argue.
Oh, listen, they're taking a charge of $7.3 billion, which never ceases to amaze me in these banks. They can take charges like that and,
Yeah,
you know,
and I think
shake
they
it
still
off.
made $13 billion. The estimate was looking for like 20, so that's, you know, they take the $7 billion charge. Maybe it wasn't in there. They don't know that's coming. They still made $13 billion. They're doubling down on Asia.
Right.
But a lot of the analysts here were saying, but they don't even say how they're going to double down on Asia. There's no details in there. They're going to cut. They want to do more with less. But the real story that I think you'll see here is how the interim CEO, Noel Quinn, is left there to make those types of decisions on an interim basis. You don't see interim CEOs taking $7 billion charges, cutting 35,000 employees, and not having the confidence of the board to be named permanent CEO, if ever.
There's no doubt. So we'll go right to, we'll go to the Hong Kong market and take a look at what it looks like in Hong Kong. It's not that bad compared to, let me put it back for 2 years. Oh, 3 years. It's been a one-way shot. My God, look at that. So this is Hong Kong dollars, 86 to 57.
Yep.
Okay. Stay right there, folks. We got Think of Swim coming up next. I'm going to get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Well, go get him, folks.